Herein, how you Hey Casper? Getting better market has been very nice to hear. Hey Val, good morning. Good morning, God knows. There was just a news and DOJ about further east why it's volatile since about 1 a.m. last night all the way through. Good to hear that you guys are trading well. Hey, Ikram. Is my mic still cutting out? A little bit. Let's see if that keeps it better. Gets it. Hey BL, how you doing? Market has been choppy. You enter any trades? We'll get to gold shortly as well. Gold is the last one we'll get to, so we'll get there. Fantastic. Give it a couple of more minutes before we get started. I traded the yen last night, late last night, early this morning, and didn't do too much today. Working on a couple of other things. Hey PM, how you doing? Good morning. Yep. We'll get to gold, XAU, USD analysis. Okay, let's get started. So before we get started, do help me out. Click that like and subscribe button if you're on YouTube. If you're on TradingView, help me out. Click that little rocket ship button and do make sure you follow my profile for any further updates, post analysis, especially on TradingView. Okay, the link is there for the trading community. The Discord link is there. I'll post it again here on YouTube. So if you haven't already, do make sure you joined up. That's where I can give you almost constant updates on anything that changes in the markets, on the news events, on any breaking news. I'll update you there. We can always take our discussions beyond this 1 hour session during the daily analysis towards Discord, and we can share our trade ideas, trade analysis, provide you some support from there as well. Okay, if you are new to the session, do drop a message, say hi, let me know where you're joining us from. And for all the regulars, good to see you again. Thank you for joining me. It is Friday. It's been a super crazy Thursday and Friday, but we are heading into the weekend. So it's going to be a little bit, after such a big move, it's going to be a little bit tricky heading into the weekend, so just be extra careful. Not only are we heading into the weekend, we're also towards the end of the month as well. Okay, so I do anticipate possibly some retracements, some deeper retracements, and very choppy price action. At any point in time, if you do have a question, do put it into the chat. Let me know. I am monitoring both the TradingView and the YouTube chat. Okay. Are you also sharing your own trades? I do share my own trades when I get into a trade, what I'm thinking when I'm in a trade, when I'm looking to get out of, or when I do get out of a trade. I do share that onto Discord as much as I can, because some of the trades are very time sensitive. I get in, I get out before I could even do a post, right? So the slightly longer term trades, I do as much as I can try and share that there. So during this daily market analysis, what I'm sharing is really my view on where I see the markets. It's all on the H1 time frame, just giving you a broad perspective, a bit of a watch list, my own watch list on where I think prices could get towards. Look for the possible trade setups. Fantastic. I hope to see you there, Casper. Hey, Subliminal Roots. How are you doing? All right, so let's keep going. Oops. A quick disclaimer, any information contained on this webinar should not be construed as advice and is presented as educational material only. Please do your own due diligence, because the contents of this webinar is not intended to be a recommendation to trade a financial product. Your objectives, financial situation, and needs has not been considered, and you should consider its appropriateness to your circumstances. Okay, so with that said, get to the news. I'll be the friendly soul for you, Casper, and there's the link there again. Hi, Ayakami. How are you doing? Good morning. So let's do a quick recap of what has happened since the last time we spoke, which was yesterday, 3 p.m. GMT plus 8. We did have at 8:15 p.m. GMT plus 8, the ECB with their interest rate decision, taking it from a 4% to a 4.25%, 25 basis point rate hike from the ECB. What we actually saw on release of that news, right? We were actually watching this together in the during the stream, and after the stream we saw a price climb up, right? I sounded a warning out to the members that as it came towards the resistance, I was watching across the other pairs weakening against the dollar, but yet we still saw the euro dollar climbing. So I was sounding that warning that we might see a retracement or a rejection of that resistance, just to be extra careful. On release of the news at 8, so the euro dollar hit the resistance of reject the resistance of 1.1136, maybe even 1.1140, and we saw a big retracement or big correction to the downside, right? Almost immediate, it went to the M15 time frame. This was at 8:15, so on release of the news, it came straight down. Zoom in there for you guys. So what happened there? It was pretty much a priced in scenario where everyone knew they were going to take it to a 4.25%, so it wasn't a big surprise. That's why we saw first a front running of the euro, push to the upside, a front running of the decision, and then on release of the news, we saw that correction back down, right? A priced in scenario, front running of the decision. With that, why it continued to drop to the downside, now breaking below 1.0980, is because during the press conference here at 8:45 p.m. GMT plus 8, what was said was President Lagarde was indicating that the near-term economic outlook has deteriorated. Bad news, dovish for the euro, and also that the ECB has switched off its autopilot. And one more line was that they could have one more hike with chance of no more, right? So they're stopping it. They're likely to stop it before the FOMC. right? So a pause on the rates at 4.25 or even 4.5% has led market expectations to see that, or to apply a more dovish tone or more dovish sentiment to the euro dollar, and that's why we saw that continue trading to the downside. This was an update I did in the group where I was looking at that rejection of the resistance for the downward potential back to the H1 time frame. I was only expecting it to come towards that previous low of 1.1040. Did more than that, broke down towards the support. Late last night, or very early this morning, as it came to the support level, I said, hey, just be careful. It's at a support. Don't rush into a trade. It's likely to wait a little while before breaking that support. And right now we are seeing that break. Okay, I'll tell you more about that shortly. So that was the news from last night in terms of the ECB and the press conference. Any questions so far? Put it into the chat, let me know. Okay, you can see here headliners being, if September rate hike comes, it will be the last. So very dovish view coming from the East. That's why we see a continuation of the downward move on the euro dollar. If it's good, let me know. Makes sense that the analysis on the euro makes sense. There's questions, type away, All right. Good. Okay. So with that, what happened last night, or very early this morning, thanks for that, BL, was, where was that headliner? It's still going down to 1.1069. Yeah, I think it's going to go down even more. So this was 14 hours ago, right? This was 14 hours ago where there was a tweet, I think it was a tweet or a headliner, that the BOJ was going to discuss on the YCC, the yield curve control tweak, to allow rates over 0.5%. This was right early in the morning, Friday morning, where that was being released. And what we actually saw, because of that, this was at 1 a.m., the US yen was at that 141 level, right? The dollar strengthened, pushed up at 141. News came out that the Bank of Japan was likely or could tweak on its YCC beyond 0.5%, and we saw the yen go pretty much in a straight line down from 141 down to 139, pretty much down towards that 139 previous swing low level, 139.20. That continued on through the night, consolidated in the lead up to the Bank of Japan's rates monetary policy decision. I did actually catch, so I was just sharing with you here on the euro, I did actually catch a small trade on the euro as it was turning down after that news decision. I did catch this. So I didn't catch that because I didn't want to enter before the news. But at that point, I was selling it down towards this level. So I had about a 50, slightly less than 60 pip profit on the euro to the downside because of the news, right? I didn't want to take it. I didn't think it was going to go all the way to the support level there. So I just got out a little bit earlier. The yen, however, as it climbed up and it started spiking down, I was scalping this to the downside. So you guys would have figured out, if you were in a Discord channel, I was chatting away, I was sharing ideas and updates, and then suddenly I just went quiet because I was scalping the yen to the downside towards that 1.39 or 139.20 level. What happened, in fact, for today was that the Bank of Japan released its monetary policy statement, its outlook report, and its policy rate. Policy rate stayed at a minus 0.1%, but during the monetary policy statement and the press conference, there was no comments about tweaking the YCC beyond 0.5%. Right? Disappointing markets significantly because they were all expecting a tweak, and that's why we saw at that point the yen shot up, right? It was consolidating along this 139.20 level, immediately went straight up to 141 again because of a disappointment, and then came back down. Right now, still consolidating along 139. Why is it perceived as a tweak when nothing much was changed to YCC? It wasn't perceived as a tweak. The news at 1 a.m. this morning was really not really a rumor, but anticipation. That's why we saw the big reaction. Then it didn't happen. That's why we saw that big spike and retrace and continued consolidation. Okay, so no tweak, but looks like I wouldn't rule it out over the next couple of weeks that the Bank of Japan could tweak rates or tweak the YCC, because typically what the Bank of Japan does is they put out a couple of rumors, and then after that release their decision based on my previous experience. So do watch out. It's going to be quite interesting there for the yen pairs. Hey Matic, how are you doing? I'm doing great. With that said, not too concerned about everything else, but tonight at 8:30 p.m. GMT plus 8, we do have again the US core PCE price index month to month, 0.3%, expected 0.2%. Right? So if this does come out at that 0.2, I don't think it would be, I don't think it would be lower than 0.2. Good, but I don't think it will be lower than 0.2. That's going to indicate further or reinforce the idea that inflation growth is slowing down in the US. Right? Do remember that the core PCE price index is the Fed Reserve's primary inflation measure. So if it does come out at 0.2 or in a wild chance 0.1 or 0, then we're likely to see the dollar index currently consolidating at 101.80. You might see that retracement back down, right? Retracement back down again. So that's the main things to pay attention to for today. Then you're going to have a good weekend. Next week, we're back on Monday. Not a lot of news. Take a breather. On Tuesday, we do have the Aussie with their interest rate decision. It was priced at a hold. Right now, it is expecting a 25 basis point rate hike again. So that's going to be interesting. I will update you on that on Tuesday. On Monday next week. So looking at the charts here, obviously the dollar did not drop as we expected. It consolidated along that 100.60 level before spiking up. In this scenario, let me find a way to put my yellow box somewhere. Okay, in this scenario, it spiked up not so much because of the strength of the dollar. Right, it's not spiking up because of the strength of the dollar. It's really spiking up because of that dovishness and that weakness in the euro. Remember that the euro does have a big proportion in the dollar index, in the calculation of the dollar index. So whenever we see the euro dropping strongly, we see the dollar index spiking to the upside. Okay, so now that the dollar has broken above that 50% retracement level. Okay, now that's broken above 50%, and the previous high from the 25th of July, I will take this away. Okay, we take all of this away. And we're now considering the price at breaking above 50 in that previous high, and also the 60% level, which is at 102. At 102, that's a 60% retracement level. How I anticipate this for today for the euro, for the dollar index. is that we're likely, I do think that we'll see it consolidate within this range. If the core PCE price index does signal that slowdown in inflation growth, then I think we could see a retracement back down. Right, we could see a retracement back down. I don't anticipate that it's going to come all the way back to 100.50 again. Let's see, where can it get to? Moment, could come back. At the very most, I would say it'll come back to that 50% level, which even that, I think it's quite optimistic. Right, at this point, apart from the core PCE price index, it's volatility of the dollar index is really going to be driven also by what happens on the euro dollar. So I think it's likely to consolidate along this 101.80 region, maybe test up to 102 before coming back down. Right? If it breaks above that 61.8 level, then we're going to see further upside. But I would say that on the 28th of July today, we could see the dollar index consolidate along 101.80, could test 102 for PCE price, for PCE could see DXY drop to about that 101.30 level. Okay, so this is a relatively big speculation that we're going to see it consolidate, spike up, and then come back down. It's going to be dependent, on several fronts. The core PCE price index, the volatility of the euro dollar, in particular. Okay, but that's what I think could happen on the dollar index. Hey Booba, how are you doing? So with that, then looking at the Kiwi dollar. Okay, Kiwi dollar, we expected it should have, did not happen. Take that away. Now that is broken. Dollar strength causing the Kiwi dollar to spike to the downside or trade to the downside, breaking that 0.6150 support level, which we saw here last tested on the 6th of July. It is, can take this away. We do have that tail there. So I'm not going to rush into it now. I would say that unless it breaks below 0.6130, breaks below 0.6130, we could see it trade down with our next support level here at 6060. Okay, and take that away because it's done. But I'm looking at this, anticipating the dollar to push up. If it does break above 6180, we do have the next big resistance or swing level here at 102.55. So it all depends on what happens at 102. Right? If it does break, we could see a test of the next resistance. So I would say that if we do see a continuous strength in the dollar, then look for it to break below 6130. Looks like it's happening now. Still within the Bollinger, that's fine. I could be looking to sell this down. 6120, stop loss 30 pips. Take profit 60 pips to the downside towards 6060. Okay, there we go. So Kiwi dollar, we're looking to sell 0.6120. Stop loss 30, take profit 60 This is on DXY weakness. We'll look to, no, not weakness, strength. We'll look to sell it to the downside. Okay. Then on to the Aussie dollar. Aussie dollar, as it came, yesterday we were talking about this, saying, hey, as it rises towards that 0.684035 level, if it broke, we could look to buy it up. If not, then a rejection, we could look to sell down. It did not, unfortunately, did not get as high as we expected to trigger that sell setup, so neither of this played out. In fact, so that we were talking about rejection with that similar price action. In fact, what happened, it broke below that 6225 level, support level, traded down to 6650, and is now approaching that 65 or 0.66 support level. Be very careful on the Aussie, because you can see at 0.66, this point on the 5th of June came down, tested this level slightly before big upside. Again on the 29th of June, tested this level before bouncing up. Again on the 6th of July, tested the level before bouncing back up again. Take this away for now. That, well, okay, so what I wouldn't do anything on the Aussie at this point, just because it is approaching a very strong support level at 0.66. If it does break 0.66, then you could see the next support at 6465. But again, remember that we do have the Aussie interest rates on Tuesday next week. So I would actually be thinking whether, now that's a resistance, whether the Aussie could come down, test this support before bouncing back up again. Hey Robbie, how you doing? Hey Kwabi. Okay, so this would be a contrarian view, this would be a counter trend view, just reverse, thinking that it could bounce off the support to reverse back up towards 6724. Not something that I would anticipate that could happen now. Maybe later on, if we do see a surprise on the core PC price index, we'll see a reaction at this point. If not, then I'll leave it for a trade next week. So a bit of a higher risk trade, 0.6620, take profit 100 pips up, stop loss 30 pips that way. Okay, so I could look to buy 0.6620. Yep, stop loss 30, take profit 100. Stop loss 30, take profit 100. This is on the scenario that we see a DXY weakness. Yeah, if we see a DXY weakness in the scenario that we are anticipating here, right? A test, and then that big retracement, a big correction back down. So I'm looking at that. Some strength on the dollar before pushing back up again. Okay, so you have in the dollar strength scenario, selling the Kiwi down. In the dollar weakness scenario later on tonight, maybe buying the Aussie back up. That is a little bit of a higher risk. Okay. Then on to what to do on the US yen. Okay, this was a good trade that we had. Take that away, take away the area, and also that squiggly line of an arrow. Now, the yen has been seeing big whipsaws at this 139 level. Okay, we can take this away. No, we'll leave it there. Okay, so we've seen that big spike around, watch out for the yen. Be extra careful on the yen because just before this session, BOJ Governor Ueda did say, right, did release a statement, we won't hesitate to add to easing if needed. They won't hesitate to add to easing if needed. That was a little bit of a surprise, considering that they're not going to, or they didn't tweak the YCC. They just released a monetary policy statement and did not announce any further easing policy. And yet, after this whole thing, they say we might, or we won't hesitate to add to easing needed. So that actually caused a brief spike in the yen. So what I would say now at this point, 139 and 139.50, it's going to be very volatile. It's going to be very volatile. We're anticipating the dollar possibly to push to the upside, test 102, maybe retrace or break through. At this point, I wouldn't recommend too much of a trade on the US yen. Okay, unless it's going to be, it's super volatile. We have a resistance at 142. Resistance at 142, big support at 139. You would want to be super short term. You could be scalping the yen if you really had to break above 139.70. Okay, here's what you could do. Take all that away. If it does break, close below 138.75, would it be worth selling this down? 100 pips to the downside. Stop loss about 30-40 pips. Then on the upside, if it breaks above 139.75, then you could trade it slightly up. I would say that this will be what I'll consider on the US yen, just because of the comments that we might see further. They've thought about further easing if needed, and anticipating some dollar strength. I would be more tempted to look for an upward move on the yen. So 140.10, stop loss 50 pips, take profit, good 100 pips, 120 pips to the upside towards 141.30. What's your analysis on the US yen due to BOJ? How do you place Fib points? I have the Fib levels on how to use Fibonacci's on my trading view, so do check that out. And analysis on the US yen is right here. Okay, so break out of this consolidation, 140. I'd say 140.20. Prefer that. 50 pips stop loss, 100 pips take profit to the upside. But that's going to be super choppy. Just be careful there. So we could be looking to buy this 140.20, stop loss 50, take profit 100. This is going to be super choppy. All right, there are a lot of conflicting news: dollar strength, dollar weakness, YCC, rumors about tweaks to the YCC, speculation that they could increase easing or further easing. I think that that's going to be choppy. So just be, monitor that trade if you're going to enter on the US yen. Hey Jerry, how are you doing? Not a good pair to trade today, you Jay. Yeah, I agree, definitely. All right, so onto the pound dollar. I was super happy when it came up, tested top of the channel, came back down, looked like it was going to bounce, but euro dollar dropping significantly dragged the dollar index up. we saw the pound dollar come down. So that trade did not trigger. Take that away. Now that it's broken the channel, that's not valid anymore. We can take, or we can leave that there. Take away the 50%. So it tested 61.8 and rejected back down. Now at that, it looks like it's bouncing or consolidating at that support level. All right, and take that away. I would say that the pound dollar could continue consolidating here, right? Because it is a Friday, because we did have many good trades over the week, I wouldn't want to take on too much risk, right? I wouldn't suggest taking on too much risk or going too crazy for trades. Secure the profits, have a good weekend, and then look into the next week and the next month. At this point, if it does bounce back up, no reason for it to bounce back up unless we do see big drop in the dollar. Could be looking for a buying opportunity. 1.2820. Stop loss very wide. Okay, no, then what you should do here on the pound dollar, let it consolidate, right? I would say look for a, right, anticipating the dollar to do that. You could be looking for it to consolidate briefly, maybe test the support level and bounce back up. If it does that, then you could be looking to buy it up about 127.80. No, I still like it at 128. You could be looking at 128. Stop loss 50. Take profit. No reason why it should go 200 pips up. Having a look at this on our 50% level, I would say halfway up at almost 80 pips, or even at a 61.8, it's 100 pips, and then you decide what happens in the middle. Okay, I don't see a reason why it should spike up 200 pips. That's why I'm looking at somewhere in the middle. So 120, 1.28, 50 pips stop loss, 100 pips take profit, buying it to the upside there on the pound dollar because of that support. 50 to 100, right? This one we're looking at dollar weakness. There we go. Cool. And then the main event, the euro dollar. We did talk about that sell to the downside, the rejection of that resistance. Now it looks like it's breaking that support level of 109, 1.0980. Oh, it's broken. Just wait a little bit, wait for it to break below this previous swing. You saw it bounce off once already. Needs to break 1.0950 before we're going to see further downside on the euro dollar, with the next big support level here at 1.0840. Someone did, hi Martin, how are you doing? Hi Blash, how are you doing? Someone did say going down to 1.1069. I've definitely done that. Okay. So I would say euro dollar, anticipating that big downward move to continue, needs to break below interim or previous swing level at 1.0945. Trade it down below that point, 1.0935. Stop loss 30 pips. Take profit 90 pips to the downside towards the support level. This is anticipating that big dollar strength to continue. 1.0935, 30 to 90, I'll be happy with that. Okay. So this is still 1.0935, stop loss 30, take profit 90. the dollar strength, or because of euro weakness. Okay, why I say or because of euro weakness, we are still seeing more updates or more headliners coming from the ECB in terms of it'll be the last rate hike. Latest data shows the euro area economic cooling, slowing down, right? So slight easing, but no all clear. So we still see some bad news coming from the eurozone. That's why we anticipate that it might not be just dollar strength, it might just be the euro weakness pushing it down. All right. Again, remember, do help me out. Click that thumbs up button, click that rocket ship button on TradingView and on YouTube. Now, next up, US Swiss franc. If you remember, if you don't, check back on yesterday's video where I was very uncertain at this point. A major support level last broken in 2015, right? So I was saying that if it does break this, or rather it could get down, if it does break this level, it could get down to 2015 levels. Fortunately, it didn't. It makes trading a lot easier that it didn't. It bounced off very strongly from 0.8560, straight up dollar strength, pushing it higher, now breaking above that near-term resistance of 86 or 0.87. If this continues, we could see it continue trading up towards 8786. But if you were looking to buy this up 60 pips to the upside, reasonable stop loss would be about 40. I wouldn't be too keen on this. Okay, so I would actually prefer on the US Swiss franc, the Swissy, to see it test that resistance. Victor, I just did the euro, so just done that. Right, test that resistance there, then I could be looking for a rejection of 8786 to sell back down on the Swissy. Okay, so could be looking at 8775. Stop loss height at 20 pips. Take profit, good 70 pips to the downside. So a lot of patience here, wait for it to push up, reject the resistance, and turn back down. Okay. 775, 775, stop loss 25, profit 7. Go. So did not happen on that. We could be looking to sell at 0.8775, stop loss 0.8775, stop loss at 30, 25, take profit at alrighty. Okay, now for Victor, just a quick recap is on the euro dollar. I'm looking at it consolidating along this range, looking for it to break below 1.0945. If it does break past that point, I'll be looking to sell down from 1.0935. 30 pip stop loss down towards the next support level at 1.0840, which was last reached on the 6th of July. So quite possible, but a bit of patience needs to break that previous swing low level at 1.0945. All right, Victor, hope I answered your question there. Then onto the US CAD. On the Loonie, yesterday we were saying possibly look to sell down as it broke, anticipating that it could break that trend line, right? Very important when you start looking at trend lines. That trade did not trigger because it tested that trend line, tested slightly, failed to break before spiking back up towards that resistance level. Okay, so that trend line has held valid. just took that right up. What I'm looking at here now is as it breaks above that resistance of 1.3230, further dollar strength. Let's see, testing that 61.8 level, it breaks up. We could see further upside on the US CAD, but we do have Canadian GDP to be released, 0 to 0.3%, right? Small increase month to month, from 0 to 0.3. Might see this trace back down. Naturally, I think that a push to the upside could continue. So 1.3250, take profit 50, stop loss even 25 is a great trade up. Okay, I'll give you two scenarios here. 1.3250, continuation to the upside. Alternatively is that we could see it consolidate along this level, then after that trade back down and bounce back up again. Why I think it could come down, because of the dollar retracement, possible dollar retracement, and also the GDP from the Canadians. But it would not be a great trading opportunity, because if it did test this level, you would have only about a 30 something 40 pip move to the upside, right? Even if you did that, 40 to 20 looks like good risk to reward, but it's going to be quite all over the place on that trend line. So I would actually prefer, not ruling out that move, but I would prefer continuation to the upside. 1.3250, 25 pip stop loss, 50 pip take profit. Oops. We're looking to buy on the US CAD, 1.3250, 20 stop loss of 25, take profit of 50. Check. Yep. Okay. So there you have it. We do have many different scenarios here. Dollar strength, dollar weakness, which ones to look at. Scalping opportunities on the US yen, pound dollar on the weakness, dollar strength for the euro dollar, and then on the US Swiss franc and the US CAD, some trading opportunities there as well. So don't feel like you have to rush into a trade today. It might be deeper retracements, right? We could see the dollar now push up and maybe later on come back down. Just be extra wary. We are towards the end of the week, we are towards the end of the month, so typically very choppy. Then lucky last, we look at gold. Right, we were looking for it to trade up, to test that resistance. Did not happen because of that dollar strength. We saw gold had a big spike to the downside, consolidated, now looking like it's going to break below 1948. With that previous swing low, I would say 1945 is now the next key level, or even 1944. 1944 will be the next key level. If it does break below this point, means that we're seeing more or continual dollar strength. Next point is 1930. Okay, trend line is not valid anymore. Take that away. It's only a small, relatively small move there on gold. Come down, break below the support, trade down. This is on continual dollar strength towards 1930. I would say here gold below 1940. below 1945, 1944, we could see it get to 1930. So 1944, we could test support at 1930. Look at pound dollar. So I got a question about pound dollar. We did that already, but looking at pound dollar again, consolidating along this level, I am looking for it to come down to test support at 1.2755. You could look to get in a little bit earlier if you wanted, so at about 1.2780. To be safer, I would say about 1.28, break above that previous consolidation, and we could see it trade up towards that 61.8 retracement level. Right, this is on the scenario that we do see the dollar test 61.8, fail to break above 61.8, have a big retracement, and we could see a bounce on the pound dollar. All right, hope I answered your question there, Rafin. Hey, Stromika, how are you doing? So with all that, can you scalp gold down? Yes, you can. I have been. So you can, but I will wait for it to break below that 1944 level to try and scalp it down, because I do scalp gold more, just because it's super choppy because of the dollar index. So I don't tend to hold on to it for too long. So I would say you might want to scalp it down towards the support, but I would say it's probably better to scalp it down to 1944. You can. It's going to be risky. It's going to be risky because the dollar is approaching a key level at 61.8, that 102 round number as well. So there's a confluence there. I'm not sure whether it would come down smoothly. It might look like that. It might look like that. Big spike down, bounce back up. If you're scalping in that scenario, then you're going to get into a lot of pain. So just be careful. Alrighty. Okay, last one is pound Kiwi dollar. Pound Kiwi pushing up. We had last time we spoke about this test and reject that came out nicely. Pound Kiwi approaching that resistance of 2.090, and you would see that almost every time it gets there, we have seen a big rejection. Pound, some strength might push this back up. Could see it break. I mean, based on what we're talking about on the pound dollar, based on what we're getting on the Kiwi dollar, I do anticipate this to break, but I don't think it'll be sustained. I think it could do that again, very similar to what has happened over the last few times. So don't think that it's going. I don't think it's going to continue. I think it's going to test, reject, and come back down. That's for sure. Thanks for that, Robbie. Everyone on the Discord channel, the link is there. Do remember to get your daily votes in. Alrighty, so with that said, let's take our discussions into the Discord channel. I hope you had a good session. I hope you have had a good session over this week. Trading well. We've shared a lot of very good trading ideas through the week. Please have a good weekend, and before that, please trade well, trade safe. I'll see you again on Monday, 3 p.m. GMT plus 8. If you have any questions, put it into the Discord channel. We'll be there to help you. Not just me, but everyone else in the very friendly community. Take care now. Bye-bye. Thanks, BL. Thanks, PM. Thanks, Carsten. Thanks, Val.